Welcome to Crypto for Seniors. Because we will be talking about your retirement plan, I want to offer this disclaimer right up front. Nothing contained in this video is considered financial advice. I am not a financial planner. As always, do your own research and speak with a professional about your situation. Now on with today's video. Did you know that a 2022 survey by Charles Schwab showed that 32% of 401k participants wish they could invest in cryptocurrencies through their plan? Yes, you heard it right. Cryptocurrencies are no longer just a buzzword or a speculative asset for day traders. They are slowly but steadily gaining acceptance among the general public and even retirement planners. So what exactly are these cryptocurrencies that we're talking about? Well, in the simplest terms, cryptocurrencies are digital or virtual currencies that use cryptography for security. They are decentralized and typically operate on technology called blockchain, which is a distributed ledger enforced by a disparate network of computers. Bitcoin, the first and most recognized cryptocurrency, has been joined by thousands of others, each with its own unique value proposition. But why the sudden surge in interest, especially among 401k participants? A few reasons come to mind. Firstly, the promise of high returns. Despite the high volatility, cryptocurrencies have shown a potential for significant return on investment. For instance, if you'd invested in Bitcoin in its early years, your investment could have grown exponentially by now. Secondly, it's the allure of diversification. Adding cryptocurrencies to a portfolio can provide a level of diversification beyond traditional asset classes. It's a new kind of asset, and it doesn't always move in lockstep with stocks or bonds. Lastly, there's a growing acceptance and mainstream adoption of cryptocurrencies. Major corporations are beginning to accept digital currencies, and institutional investors are starting to incorporate them into their portfolios. This legitimizes cryptocurrencies and increases their appeal to everyday investors. However, it's not all sunshine and rainbows. Cryptocurrencies are notoriously volatile and can be complex to understand. They can provide substantial gains, but also substantial losses. This is why it's crucial to do your homework and understand what you're getting into. With this rising interest, it's important to understand what this could mean for your retirement plan. Cryptocurrencies could potentially offer high returns and diversification, but they also come with their own unique set of risks. So, stay tuned as we delve deeper into the world of cryptocurrencies in your retirement plan. Cryptocurrencies can offer some compelling advantages when added to a 401k plan. Let's delve into the specifics. First and foremost, cryptocurrencies present the potential for high returns. Given the volatility of cryptocurrencies, the opportunity for substantial gains exists. For instance, imagine if you had invested a small portion of your retirement savings in Bitcoin in the early 2010s. By now, you would have seen exponential growth in that investment. It's this potential for meteoric rise that makes cryptocurrencies a tantalizing addition to any portfolio. Secondly, cryptocurrencies can offer a beneficial layer of diversification. Traditional 401k plans often consist of a mix of stocks, bonds, and mutual funds. By adding cryptocurrencies to the mix, you're introducing an asset that isn't directly correlated with the stock market. This can help to spread risk and potentially improve overall portfolio performance. Lastly, cryptocurrencies can serve as a hedge against inflation. Unlike fiat currencies, which are subject to inflationary pressures, the supply of many cryptocurrencies like Bitcoin is limited. This scarcity can help maintain the value of your retirement savings in the face of rising prices. So, you see, adding cryptocurrencies to your retirement can potentially enhance the growth of your retirement savings. It gives you the chance to ride the wave of digital currency growth, provides a unique diversification option, and can offer a hedge against inflation. However, as with all investments, there are also downsides to consider. Cryptocurrencies also come with their set of risks when added to a 401k plan. In our journey to understand the pros and cons of adding cryptocurrencies to your 401k plan, we've explored the potential benefits. But now, let's dive into the other side of the coin, the risks and potential downsides. First and foremost, the high volatility of cryptocurrencies is a significant concern. Cryptocurrencies can experience huge swings in value in a short period. One day, you may be riding high on a wave of green, and the next, you could be deep in the red. This roller coaster can potentially eat into your retirement savings and even wipe them out if the market takes a severe downturn. Next, we have regulatory uncertainties. The world of cryptocurrency is still relatively new, and governments and regulatory bodies around the globe are grappling with how to manage it. Laws and regulations can change rapidly and unpredictably, leading to massive impacts on the crypto market. This uncertainty can add an extra layer of risk to your 401k investments. Finally, there's the potential for loss of investment. Unlike traditional investments, cryptocurrencies are not insured or protected. If a digital wallet is hacked or a cryptocurrency exchange goes under, your investment could disappear into the ether with little to no recourse. These risks are not to be taken lightly. High volatility can lead to sleepless nights. Regulatory uncertainties can bring about sudden changes in your investment's worth, and the potential for loss of investment can mean saying goodbye to your hard-earned savings. However, it's important to remember that every investment carries some level of risk. The key is understanding these risks, measuring them against potential rewards, and making informed decisions that align with your financial goals and risk tolerance. So while the world of cryptocurrencies offers exciting opportunities for growth, it's also a world fraught with risks. As with any investment, caution and due diligence are your best allies. Balancing these potential rewards and risks is a critical part of retirement planning. Deciding whether to add cryptocurrencies to your 401k plan involves careful consideration. Just like any other investment, it's crucial to understand your personal risk tolerance, investment horizon, and financial goals before you dive into the world of digital currencies. Risk tolerance refers to your ability and willingness to lose some or all of your original investment in exchange for greater potential returns. Cryptocurrencies are known for their high volatility, which means the value of your investment can fluctuate wildly in a very short period. If you're someone who prefers stability and cannot stomach the idea of potentially losing your hard-earned money, then investing in cryptocurrencies might not be for you. Next, consider your investment horizon. This is the length of time you plan to invest before you need to start withdrawing funds. If you're nearing retirement and plan to start drawing from your 401k soon, the volatile nature of cryptocurrencies might not align with your needs. However, if you're younger and have a longer investment horizon, you might have more time to ride out the highs and lows of the crypto market. Your financial goals are another critical factor. Are you looking to aggressively grow your retirement, or are you more interested in preserving what you already have? If you're aiming for growth and are comfortable with risk, allocating a portion of your 401k to cryptocurrencies could potentially boost your returns. It's also worth noting that navigating the complex world of cryptocurrencies can be overwhelming. That's where professional advice comes in. A financial advisor with experience in cryptocurrencies can help you understand the intricacies of these digital assets, assess your situation, and guide you in making informed decisions. Don't forget, investing in cryptocurrencies is not a one-size-fits-all strategy. It's a personal decision that should be based on your unique circumstances, goals, and comfort with risk. Investing in cryptocurrencies is not for everyone, but it could be a viable option for some. Let's sum up what we've covered regarding adding cryptocurrencies to a 401k plan. We've journeyed through the burgeoning interest in cryptocurrencies, a trend that's not just for the tech-savvy or risk-tolerant anymore. A third of 401k participants, according to a Charles Schwab survey conducted in 2022, expressed a wish to incorporate cryptocurrencies into their retirement schemes. Clearly, the interest is there. We've also delved into the potential advantages of adding cryptocurrencies to your retirement plan. Cryptocurrencies, being a relatively new asset class, offer the potential for high returns. They also provide a level of diversification that can help to hedge against traditional market risks. Additionally, the use of blockchain technology and cryptocurrencies offers transparency and security that is often lacking in other investments. However, we've looked at the other side of the coin as well, the disadvantages. Cryptocurrencies can be highly volatile, with prices that can fluctuate wildly in a short period. Their regulatory environment is still evolving, which can introduce additional risks. And while the potential for high returns is there, so too is the potential for significant losses. And let's not forget the considerations involved in adding cryptocurrencies to a retirement plan. This is not a decision to be taken lightly. You need to consider your risk tolerance, investment horizon, and overall investment strategy. You also need to understand the nature of cryptocurrencies, their potential returns and risks, as well as the fees and expenses associated with their investment. So there you have it. The landscape of adding cryptocurrencies to a 401k plan, with its peaks of potential high returns and valleys of volatility, is not for the faint of heart. But with careful consideration and informed decision-making, it could be a journey worth embarking on for some. Remember, your retirement plan is a long-term investment, so make sure you're making informed decisions that align with your financial goals. Thank you for watching. If you enjoyed this video, please like, subscribe, and comment below if you are adding crypto to your retirement plan.